It's time for another video highlighting the currently best P2P lending platforms for investors in 2022. This video is for you whether you're an experienced investor or a newbie just about to start earning passive income by investing in loans. Today I will mention 5 platforms that I believe offer the best risk and return ratio. I'm your host Jakub from P2P Employer, an independent comparison site that helps you compare various P2P lending platforms where you can earn passive income. If you're interested in regular updates, honest reviews, and non-sponsored interviews with CEOs and founders, consider subscribing and hit the notification bell to not miss out on future videos. This video is going to be slightly different. I will not be following a fixed rating scheme, and I will also not be speculating on the weight of every rating factor. Instead, I will give you my brutally honest opinion on some of the best P2P lending sites in the industry and highlighting the pros and cons you should be aware of. The information in this video is not meant to be taken as investment advice. P2P lending is risky on any website and there is a risk that you will lose your money. Also, this video is biased. I have invested on all of the mentioned platforms with my own funds for several months or even years. I also talked to the management of every platform on multiple occasions and visited most of them to get insights into how they operate. So if you are interested in information based on my experience with the platforms, I suggest sticking until the end of the video. So as we have got the disclosure out of the way, let's tackle every single platform one by one and highlight some of the essential points to consider. So the first platform in this list is EstateGuru. EstateGuru is an Estonian-based crowdlending platform that offers investments in mortgage-backed loans with an average return of 10.17% per year. The platform offers a user-friendly auto-invest, including predefined auto-invest strategies. Those tools help you to automate your investments if you don't want to review the individual loans yourself. EstateGuru also offers a secondary market where you can sell your loans should you want to exit your position before the end of the loan term. There is a secondary market fee for those who wish to sell their loans. The platform also offers an early exit option which allows you to immediately exit your loans in the Nordics and Baltics with a 35% discount. This is not something I would recommend unless you desperately need to withdraw your funds from EstateGuru. EstateGuru offers broad diversification options across various European countries. The platform is also regulated by the central bank in Lithuania and is in the process of obtaining a European crowdfunding license. So those were the facts. Now, what about my experience? I joined EstateGuru back in February 2018, so I got to see the platform's development with all its ups and downs. Overall, I can say that it's always been a solid platform. It's certainly not perfect. There were some hiccups, mainly connected to the availability of loans or default rates. At the end of the day, however, the management has been always able to meet investors' expectations and protect their interest, which should not be taken for granted. The platform offers investments only in the EU, which is connected to lower risk than when investing in emerging markets outside of Europe. Additionally, all of your assets are backed by a mortgage and you have a certified evaluation report available with every project, so it doesn't get much better regarding the platform's transparency. Of course, we shall not be naive here. EstateGuru is expanding into various markets and the quality of evaluation reports might vary. It's recommended to analyze EstateGuru's loan book and check which countries generate a higher default rate. That way you can make more educated decisions. Also, investing in multiple stages of the same project might not be the best approach, as if one project defaults, all the others might as well. So, what are the pros and cons to consider? EstateGuru follows local regulations in all markets. The platform offers very intuitive auto-invest strategies and provides a secondary market that increases the liquidity of your investments. Also, the company has offered secured investments since 2014, meaning there is already a decent track record that you can review. The disadvantages might be the €1 withdrawal fee, 2% secondary market fee, 35% early exit fee, and the fact that most loans are being repaid at the end of the loan term. Hence, the interest and loan repayment don't happen every month like it's the case on other platforms. Generally speaking, I would say that EstateGuru is more suitable for educated or experienced investors who can assess the risk of individual projects. To be eligible to invest on EstateGuru, you must have a European bank account. The minimum investment amount on EstateGuru is currently at just €100. If you are a newbie or someone who prefers more flexible terms, you might as well invest on Esketit. Esketit is a P2P lending platform that offers on average a 13% return by investing in loans from Green Finance in Czech Republic and Spain or Money for Finance in Jordan. Esketit is relatively relatively young platform launched in 2020 to finance the loan portfolio of Cream Finance and a separate loan originator founded by the founders of Cream Finance. On Esketit, you are essentially investing in payday loans with a maximum duration of 3 months. The platform is likely one of the best developed P2P lending sites on the market. You can use predefined investment strategies that enable you to invest with a free instant exit option. You can also define your custom automated strategies or even invest manually. While operating from Latvia, Esketit is legally based in Ireland, meaning that the platform itself is not regulated. As explained in our talk with the platform's founders, a regulation for the platform isn't going to make your investments more secure. What's however essential is that the lending company you are investing in follows all local regulations. My experience with the platform has been good so far. Everything works as expected and the buyback guarantee is being honored, which cannot be said about many other platforms in the market. Another unique feature is the option to deposit stablecoins, which allows non-European investors to join the platform and indirectly earn up to 14% interest on stablecoins, which is the highest return you can currently get on a legitimate platform. What I personally appreciate about Esketit is its no bullshit attitude. During my visit in Riga, I got clear answers to all my questions and I didn't get the impression that they try to sweet talk particular risk-related issues. While investing in loans from Jordan is certainly not risk-free, the platform seems to have solid risk management in place to mitigate risks and maximize returns for investors. So what are the pros and cons of Esketit? Some advantages are certainly the track record of Esketit's founders who founded Cream Finance. Investors will also have access to audited financials, which isn't always the case in the P2P lending space. The platform itself is very intuitive and easy to use. The early exit option together with the higher interest rate is certainly something many investors appreciate. In terms of disadvantages, some investors might think that Esketit is dodging the regulation in Latvia by moving to Ireland. That's correct. So if it's crucial for you that the platform is regulated, Esketit isn't necessarily the best fit for you. The diversification options on Esketit are not as broad as on other platforms, so you might likely not use Esketit as your only P2P lending platform to earn passive income. A disadvantage can also be that the group guarantee from Cream Finance is not covering the loan originator from Jordan, which is not part of the group, but a segregated venture by the founders of Cream Finance. Esketit is not trying to compete with other marketplaces in the industry, and its primary goal is to fund its loan book in Jordan and other countries. You could also use Esketit as a suitable alternative to Bondor's Go and Grow, which offers just 4% per year for new users compared to Esketit returns of 12% if you invest in Cream Finance loans in Europe. Another excellent platform is Robocash. This P2P lending site offers investments in Robocash's lending operation in Singapore or its lenders in Kazakhstan, Spain, and the Philippines. You can earn between 8 and 13% interest by investing in loans from Robocash. The interest rate depends on the loan term. The longer the loan term, the more interest you will earn. The platform offers a functional auto-invest tool that you will have to use to invest in loans. There's also a relatively liquid secondary market where you can sell your investments should you want to exit the platform before the end of the loan term. Robocash investment platform is legally based in Croatia, where there is no regulation for P2P lending sites. Robocash's group operations are split across various branches in Latvia, Russia, Kazakhstan, the Philippines, and Singapore. My experience with Robocash has been good so far. The buyback guarantee is being honored even during more challenging macroeconomic events such as domestic conflicts in individual countries or the global pandemic. I can certainly tell that the platform's goal is to provide an easy-to-use platform that just works, and that's precisely what Robocash stands for. So the advantages of Robocash are certainly the liquid secondary market where you can sell your portfolio within just a few days. The platform is also very intuitive, which makes it suitable for beginners. The Robocash group publishes consolidated audited financial reports and quarterly performance overviews. Additionally, we have had multiple interviews with Robocash covering the loans performance, the development in Kazakhstan, or the introduction of the recently newly appointed CEO. The downside of Robocash is its outdated user interface, which looks exactly like when the platform was launched in 2017. Some investors might not like that Robocash has recently lowered the interest rates for short-term loans. This is a question of demand and supply, and if you have an issue with that, I suggest investing in longer-term loans and locking up that 13% interest for the next 2 years. There is no reason to complain about the decrease of interest rate, as it's a very normal market development. A disadvantage might also be the somewhat limited diversification options. If you're interested in investing in Europe, you will only have the chance to invest in loans from Spain. So PeerBerry is another platform that deserves to be listed amongst the best P2P lending platforms for investors. The P2P lending site currently offers around 11% interest, and you can invest mainly in loans from Poland, Vietnam, Kazakhstan and Romania, with some minor exposure in Kenya. PeerBerry's purpose is to fund loans from the Aventus Group and a few other lenders such as GoFingo, LitHome or SIP Group. The platform does not allow any other lenders to join PeerBerry, as they simply cannot control the risk of those loan portfolios. The CEO of PeerBerry has live insights into the performance of all loans from all lenders under the Aventus Group, which means that he knows precisely how they perform on a daily basis. Marketplaces don't have access to this type of information, as they rely on lenders sending them non-standardized reports on a monthly or quarterly basis. PeerBerry offers an auto-invest, including automated strategies that will help you diversify your portfolio without spending too much time on it. Additionally, you can also invest manually. There is no secondary market on PeerBerry, meaning you won't be able to exit your portfolio before the end of the loan term. What's worth mentioning is also that PeerBerry is legally set up in Croatia while operating from Vilnius, Lithuania. My experience with PeerBerry has been satisfactory since I joined the platform in 2018. The company handled the start of the global pandemic or the domestic challenges in Kazakhstan without any hiccups. Due to its high exposure in Russia and Ukraine, the war in the country has impacted both portfolios significantly. Russia and Ukraine halted all outgoing transfers, meaning the lender cannot fulfill the obligation towards investors. While other platforms would call a force majeure event and wind down, PeerBerry initiated the group guarantee agreement, under which other lenders within the group pay back the loans from impacted portfolios. According to the latest data, PeerBerry's partners have already repaid more than 42% of war-affected loans. No other platform in the industry fulfilled the obligation of the group guarantee, which is why PeerBerry deserved the spot amongst the best P2P lending platforms in Europe. The main benefit for investors on PeerBerry is the platform's management. I've talked to the CEO of PeerBerry and the CEO of Aventus Group on multiple occasions, and I can share with you that fulfilling obligations towards investors are their highest priority. Apart from that, PeerBerry's investors get a very user-friendly platform with charts highlighting the performance of their loans. The downside of PeerBerry is the lack of secondary market, and they currently locked funds in war-affected loans. Moving on to the last platform on this list of the best P2P lending sites, YouHodler. YouHodler is a bit of a hybrid between a lending and a trading platform. The company is the only crypto lender we have been recommending this year and the only crypto lending company willing to speak to me about its business model. YouHodler offers 8% interest on stablecoins, the closest cryptocurrency to traditional fiat currencies. The platform also provides single-digit returns on other cryptos such as Bitcoin, Ethereum or Litecoin. The company has recently become regulated as a cryptocurrency service provider in Italy, although YouHodler is based in Switzerland, Cyprus and Montenegro. Users that want to earn a yield on their cryptocurrencies can use YouHodler's savings account, which has worked without any hiccups throughout YouHodler's existence. The platform also offers advanced lending and trading features for those interested in trading volatility in crypto markets. Those additional features come with specific fees and higher risk than the crypto interest account, which provides instant liquidity. Suppose you are interested in learning more about how YouHodler makes money. In that case, I suggest watching my visit of YouHodler's headquarters in Switzerland, where I dive deeper into the latest developments of the platform with the CEO Ilya Volkov. My experience as a user of YouHodler was as expected. The crypto interest account is the most stable and conservative feature that enables users to earn passive income on their crypto deposits. Any other features are connected to higher risk levels, which are outside of my risk appetite, nor the time commitment that I'm willing to spend on monitoring my positions. The benefit of YouHodler is certainly the transparency surrounding its business model, which none of the other market players match. YouHodler is not rehypothecating your assets nor staking them on external DeFi protocols, which allows the platform to manage the risk much better. In addition, the platform does not offer any useless tokens, nor do they require you to stake your crypto for high rewards. YouHodler supports yield on various cryptocurrencies, which most crypto enthusiasts appreciate. The downside of YouHodler is the relatively low yield on crypto deposits. The company has reduced the yield on stablecoins from 12% to 8% in the recent months, which makes many wonder whether the return is still worth the risk. Some investors might also dislike the rather strict KYC requirements on YouHodler. Those are required as YouHodler is seeking licenses in various European jurisdictions, and a solid KYC procedure will help them to get those licenses sooner rather than later. Another downside of YouHodler is that it doesn't accept clients from the US due to regulatory requirements. While US clients might be disappointed, I can tell you that it's much more sustainable to operate somewhat legal in Europe instead of following an opportunistic approach to growth, which can eventually backfire. So those have been the best P2P lending sites in 2022. I won't be ranking them as it's frankly irrelevant. After personally visiting most of the platforms, I can tell you that every single one of them is different in its own way. Every company follows a different risk appetite, and everyone focuses on a different market or product that generates yield. Every platform is run by different people with different backgrounds in banking, lending, or real estate. What you should know is that all platforms are for profit, meaning they have to take risks to generate the yield you are earning. Like any business, every company faces certain risks, and it's up to the management to deal with those risks and take precautions to minimize those potentially harmful events. So the risk of your investments is primarily determined by the decision makers and the risk managers of every platform. That's also the reason why I travel to various platforms and talk to their CEOs, founders, or risk managers. Getting insights into their risk management and the data they use to make decisions gives me as an investor a good impression of the risk that I am taking. And you as a viewer can benefit from those impressions by watching our videos here on this channel or subscribing to our Buy Me a Coffee site and accessing exclusive long-form interviews to give an even better picture about who is running those companies. At the end of the day, risk managers and CEOs are in charge of your funds, and it's their duty to do their best to fulfill the obligation towards investors. While I could rank those 5 platforms based on predefined factors, it won't really matter as every investor has their own risk appetite and preferences. While on P2P Empire, you can study the ins and outs of various platforms. At the end of the day, you have to make your own financial decision and monitor the performance of your portfolio. Before you head over to the comment section and ask why other platforms are not mentioned, I just want to clarify that those platforms that I mentioned are my favorites at the moment. You can certainly invest also on other platforms. If you decide to invest on platforms rated with at least 4 stars on P2P Empire, chances are you will have a good experience. If you don't mind additional risks, you might as well consider platforms with a 3.5 star rating. Most platforms offer a cashback bonus for our readers, so if you are not registered yet, I suggest you navigate to our bonus page and grab yourself a free investment bonus. So that wraps up this video about the best P2P lending platforms. Do me a favor and hit the like button if you found it valuable. Also let me know your top platforms in the comment section below. Thanks for watching, and I'll catch you in the next one.